While there are many financial and legal issues to consider as a landlord, make sure that you don't overlook tax considerations of earning rental income. Hi, my name is Rachel from CloudTax, to guide residential or commercial property owners to deduct some expenses on their income tax return. On the Form T776, you can claim rental income and expenses. You should also include the rent from your tenants as rental income in the current tax year. Examples of expenses are home insurance, heat, hydro, mortgage interest, renovation, and much more. If it is for 100% rental property, claim the full amount of your expense related to this. However, only claim a percentage if you are renting out a part of your residence. You can also deduct property insurance premiums paid towards your rental property. If your premiums provide coverage for more than a year, only deduct the current year's coverage, and you can deduct the remaining premiums in the year they provide insurance coverage for. One of the main expenses would be mortgage interest. For example, if you paid $10,000 a year in mortgage interest for your rental property, you could claim the full amount on your tax return as long as the rental property is not your primary residence. However, you cannot claim a tax deduction for an amount paid towards mortgage principal. You can also deduct amounts for advertising that your rental property is available for rent. Some examples of expenses are newspaper, websites, and publications. With advertising, you are able to claim the full amount. If you spend $300 to advertise your vacant apartment in the newspaper for a month, you can claim the full amount as an advertising expense on your tax return. You can claim the funds you borrowed for construction, renovations, and upgrades to your rental area. As a landlord, you are also able to deduct fees related to obtaining your mortgage for rental property, such as the mortgage application, appraisal, and legal fees paid to your real estate lawyer. If you paid $1,500 to your real estate lawyer for closing costs, claim it on your tax return to help offset your rental income. Moreover, you can deduct property taxes that relate to your rental property for the period when it was available for rent. Claim only the portion that relates to your rental property. For example, if you paid $5,000 in property taxes on your principal residence last year and you rent out your basement apartment, which is 50% of the total area of your home, claim $2,500 as a property tax expense. Lastly, you can deduct expenses for utilities such as gas, oil, electricity, water, and cable if your rental arrangement specifies that you pay for the utilities of your rental space or units. Similar to the previous examples, claim the full amount if you rent out full space or a portion of the area that is being rented out. Remember, with CloudTax Pro, you can file your taxes in the comfort of your own home, and there is no need to visit. We have tax experts available on demand that can provide personalized advice and go to a full preparation of your tax return so that your taxes are done right. For more information about this and other tax topics, please visit cloudtax.ca.